This voice is taken from an article with the title, "What is the historical impact of economic events on currency pairs?" which has been published on TRADERTALKSNET. The historical impact of economic events on currency pairs is an important factor to consider for any trader or investor looking to get involved with the foreign exchange (forex) market. Currency pairs are a form of investment that involve two currencies, and the value of one currency is determined by the value of the other. As such, the performance of any currency pair is largely determined by the economic events taking place in both countries. For example, the US dollar, USD, is a major currency that is heavily influenced by economic events in the United States. When the economy of the US is doing well, the US dollar tends to appreciate, meaning it is worth more compared to other currencies. On the other hand, if the U.S. economy is not doing well, the U.S. dollar will depreciate, meaning it will be worth less compared to other currencies. Therefore, any economic news that has a positive or negative impact on the U.S. economy will likely have a corresponding impact on the value of the U.S. dollar. Similarly, the pro forma NCE of a currency pair such as the British pound, GBP, and the euro, EUR, will be heavily impacted by the economic events taking place in both the UK and the Eurozone. For instance, if the UK economy is doing well and the euro is struggling, the GBP-EUR currency pair will likely rise. On the other hand, if the UK economy is not doing well and the euro is performing well, the GBP-EUR currency pair will likely fall. Another important factor to consider when looking at the historical impact of economic events on currency pairs is the political environment. Political events can have a major impact on the value of a currency, as the policies and decisions of governments can have a significant effect on the economy. For example, if a country is facing a political crisis, investors may become wary of investing in the country and its currency, leading to a depreciation in its value. Similarly, if a country is facing a positive political event such as an election victory, investors may become more confident in the country and its currency, leading to an appreciation in its value. Finally, it is important to consider the impact of monetary policy on currency pairs. Central banks, such as the U.S. Federal Reserve, the Bank of England, and the European Central Bank, play a major role in setting interest rates and controlling the money supply in their respective countries. Changes in these policies can have a major impact on the value of a currency. For example, if a central bank increases interest rates, this can cause the currency to appreciate due to increased demand for the currency. Similarly, if a central bank decreases interest rates, this can cause the currency to depreciate due to decreased demand for the currency. In summary, the historical impact of economic events on currency pairs is an important factor to consider for any trader or investor looking to get involved with the forex market. Economic events, such as GDP growth, employment figures, political events, and central bank policies, can all have a major impact on the performance of a currency pair. As such, any trader or investor should be aware of the historical impact of economic events on currency pairs before entering into any positions in the forex market.